Hello again, everybody. It's Michael with the latest supply and demand market report installment. It's the 17th of April 2022. It's good to be back. Let me start by saying thank you to all of you who have been in touch with me over the last year, asking after my welfare. I've had to take time out for personal reasons, which are beginning to settle, so I thought I'd come back and start off with a thank you to all of you who've checked in, who've made inquiries about the video course or the one-to-one training, which we're going to resume doing now. The roundtable has continued, but that's about all I've been able to manage over the last year or so. So that's still also going on, and will hopefully continue to go on strong, and we'll pick up from where we left off. Now, a lot has happened in the last year, obviously, in the markets. So it's going to be fun taking a look at the events with you on these videos going forward. We are in unprecedented times, obviously, and lots has happened in the various markets. So we'll take a look at those. Okay, so we'll do what we normally do, and we'll start off with the point of view that this is for educational purposes only. You are responsible for your own financial astuteness and the managing of your money. This is purely for entertainment and education. I also wanted to say that we will be looking at various markets across various time frames. It is also your responsibility to look at which one suits you and not to try to be a mini version of anyone. Okay, you are you, and nobody else can do you like you. So remember that. The other thing I will say is, and this is a philosophy that I've shared in my blog posts on forexfactory.com or in email conversations with people who've been in touch with me at the email address that you can see on the screen, storehouseanalytics@gmail.com, that there are no secrets in the market. Supply and demand is one of a myriad of ways to look at markets. It's not by any means a holy grail thing. It's not by any means the best method of analysis. There's no such thing. Let's be clear about this and be open and transparent about it. There are many, many, many successful methods used in the markets. Okay, supply and demand happens to be one that I am particularly proficient in because I've done it for the last 12 years straight. It's a methodology that I've been steeped in and learned from the inventors, learned from the best, and not just in free video courses, but actually paid courses over several years with people literally standing over my shoulder, showing me how it's done and developing the mindset and the understanding around it. But it is by no means a holy grail. I've also been trained in various other methodologies, in Wyckoff, in technical analysis, in understanding price action. Whatever works for you, whatever tools you need to bring to the table, whatever learnings you apply to the market, it's for your benefit and your benefit alone. You will benefit from your knowledge, and if you wish to share it, the world would be a better place for it. So I just wanted to get that out there in my first video back, because I have been in the shadows, so to speak, and I have seen with great gladness how the supply and demand community has grown, but also with that growth has come some inaccuracies from the foundational principles of the methodology, and with that there's a bit of confusion that will most likely arise in new people who have come into the methodology. So we'll hopefully start to correct that and go, as we always do, from first principles, just looking at price. And also the final thing, and I'm sorry to be starting with this, but it's something that's become a little bit of a irritation for me, if you like. It's the idea of indicators, and indicators being the enemy, indicators being useless, and indicators not being necessary. Well, that depends on your method. That simply depends on your method. It has nothing to do with, again, that holy grail that people seek. There is no one indicator, just like there's no one solution to many problems. There isn't one indicator that's going to be the one thing you need. It's going to be incorporated. It should be incorporated into a system. So how you use it, when you use it, that's the skill development. That's the knowledge base and the understanding you develop when you learn about the technology. Technology is a big part of trading, and as I said earlier, whatever works for you, whatever you understand. What is not ideal is to put a bunch of things on your charts that you don't understand, you don't know how they work, but you saw them on someone else's chart and you thought they looked cool. That is not kosher. But having an understanding of anything, whether it's moving averages, whether it's the RSI, the stochastics, whatever you use, there should be a reason. And of course, there should be an understanding and a knowledge base behind that. When to deploy it, when not to deploy it. That kind of thing. So that's what I wanted to start with, and I wish you all well in your travels in the markets. Let's get down to it. Okay, so we'll go through the majors to start with, and then we'll go through other asset classes, indices, and gold and oil. I'll even throw Bitcoin in there because it's beginning to look interesting a little bit again. All right, so we'll start with the US dollar. So I believe we were down in here the last time I did a video in the US dollar. We were around this level. That was where we were when the last video came out, and you can see what has happened since. So if we go now and we start with the basics, as we always say, we'll look up and left and looking for supply. Well, we have these levels here that have been here for many a year, and we have talked about for many a year. This is the range that we've been in. Now we are climbing very close to the top of that range, and as you know, within the methodology, we are not keen on selling into higher in the range or into supply areas. This area may very well be blown through, but for now, the information the markets have given us on this chart is that we are forming demand levels as we go along. This isn't the greatest, it's not fully formed yet, but I'll just note it for you. There are levels below you, so be mindful of that. There is also still the issue of trend if you do get down to these lower levels, so that's something to keep in mind. What will the trend be by the time prices get here? You may have new supply zones formed, but for now, this is where the last set of buyers were at before prices moved out. How far prices will go, will they come back? Time will tell all of that, but you want to make sure you are not selling into the 98.80 to 97.71. That at least we know. If and when prices get up into this level, we will be actively looking for selling opportunities. Please note what I said. I didn't say we will sell. I said we will start looking for selling opportunities, because we don't know, as we said, whether sellers will show up here and mount a resistance to the buying that has been taking place since May last year. They've tried several times at various supply levels as we've gone on. They've tried in several supply levels, even this gobbledygook area at the top here. That's why we had the basing, then we broke through them. We worked through this supply. It seemed to work for a little while. Twice we went deeper in. Second time they tried to sell it down and the buyers came in. This area, as we know, is not the greatest supply zone. There was supply there, but too much time spent at this level. So it's based a little bit as well there, but again pushed out, suggesting that the buying is continuing at a fairly strong pace. Will it do the same at this level that has already been tested once, twice? If it does get back up there, that will be the third time at that level. We know that within the methodology, the more times prices test a level, the deeper into the level it goes, the weaker the level is. You can see the first test was right at the proximal line. It went deeper in, about 50% into it, so that the orders at this level are being eaten up, being taken up gradually. Okay, so we will have to wait and see. Now the final question, which is one for you to consider and reflect on, is with the room that I have between where prices currently are and the supply that is above, should I be buying? And the things I would suggest, humbly suggest you consider are, how far have prices moved already? Should we be buying at these levels up in here? Prices have gone, as we said, from May last year. They've continued in rally-based rallies, drop-based rallies, to where we are now. It's a big move in less than a year. This is a weekly chart, by the way. I do apologize. I should have said that from the beginning. But prices are going up and they've moved up quite significantly. Is this the time to be buying? It may be if you don't fully understand the markets yet and you're new to this, but what I would say is we wouldn't be aggressively starting new positions at these levels. Definitely not. It's gone too far too quick. We want to try and time our entries and buy low and sell high. There are strategies that buy high and sell higher. Those also work. But for now, if you're going to do anything, it would be to wait. I would suggest for prices to see if prices come back, become a bit cheaper, and then you look for buying opportunities. Not buy, you look for buying opportunities at these levels. Okay. All right, I hope that's clear. Just to finish off, in the dollar, there will be more supply above, but that will have its own opposing demand that will form somewhere along as it goes. If it does go through this supply zone here, it'll have some demand form. For now, this is the one that's going up against these supply zones. Okay, there are supply zones up here, some up here. Okay, so if we go to the euro, which is the opposite of the dollar, because the euro is over 50% of the Bloomberg dollar index, this is what that looks like. So it's just a flip-flop of it. The levels are not as clean, but they're similar enough. So this is the extreme level we have which is the opposite of that extreme dollar supply level, and that's the euro supply level up there. Again, forming some supply in here, not the greatest because of the size of the wick. That's the reason. It's always better for the basis to be tight, because what this means is prices did not just base here. They tried to break out and they had to be rejected by the sellers. So that area is fairly wide for an institution to try to build a base. So if prices do come back, again, you want to be watching for selling opportunities on a smaller time frame. Not ideal to take a zone that is structurally impaired, if you like. It's not the most ideal structure, compared to, say, something like this, which is much better structure in terms of the formation in there. Okay. So those are the levels in the euro. And again, this is a weekly chart. So we're talking medium term trading. We're talking weekly income trading as the term goes. Okay. Let's move on to the pound. The pound has been falling for several months now. We are back down into, let me just widen this. We are back down now into some demand, hence why you see the attempts to go up. But with the power we've just seen in the US dollar, it has struggled. It's made it to new lows within that level, so it may be time for us to start looking for buying opportunities in here now, especially as we said, the dollar is getting into rarefied air and to an area where the assumption is that there will be some selling with this one coming deeper into the level and, you know, not showing yet anyway a lot of selling. I mean, we could have just one big red candle to take out this zone, but for now, I'll show you the next step would be to go into the daily chart and start looking. Well, on the daily, you can see that prices are trying to hold these lows here. If you're into classical technical analysis, you're beginning to wonder, is this a double bottom here? Of course, you won't know that until this peak between the two lows is taken out, this peak here. And if you do, as a supply and demand trader, you're thinking that's going to be a breakout right into this supply zone, which is exactly what a supply and demand trader would be looking to fade. But given where we are on the weekly, and this is a bit of multiple time frame analysis, I wasn't intending on going into this one today, but hey, it's been a while. It's fun for me. So looking at this, what you would be looking at as to try to go long, a couple of things. You have the supply. What we don't know yet is what kind of demand is going to form as we approach this level. We don't know what kind of demand is going to form along the way. So that will be something to watch out for. That will be one of the important things to watch out for. Secondly, another way that you could evaluate whether buyers are beginning to show up at that weekly level, which is all of in here where we're seeing this happen on the daily chart. We're just taking a daily slice of that weekly chart. You're looking at the momentum of this market and seeing, you know, will it be broken? I mean, that, as we've taught over the years, one way to evaluate the ending of momentum is to wait for a whole full candle away from the trajectory of the momentum, meaning an open, high, low, close candle, not touching the downward trend line or momentum line that we've drawn, which incorporates the two most recent peaks if you're drawing it to the downside, or the two most recent bottoms if you're drawing an upward momentum line. Slightly different too. It's more of a DeMark way, Tom DeMark way of drawing trend lines versus a traditional technical analysis way, which is valid as well, depending on the situation. So the valid traditional trend line drawing, for example, could be something like this. You're looking for at least 2 points, and you would have various ones to draw, and there isn't a perfect one. But for momentum, you're looking at you're looking more closer to price, the more recent momentum, the two most recent peaks make a new low. If you wanted to draw a downward momentum line, and that's another filter we add, the fact that we require that they make a new low. So that peak right there, when prices left, they made a new low. This peak here, when prices dropped, didn't make a new low, but it's the peak that is immediately above a peak that did make a new low. So that's what qualifies that level, not that it in itself made a new low. So those are the subtle nuances. Again, not something I had anticipated I'll go into, but I've done it already now. So there we go. So traditional and momentum trend lines. So you could wait to see if that breaks and that forms. But what that would all that would mean, though, ladies and gentlemen, and everyone else watching, is that the downward move has ended, and this market would have gone from being in a downtrend, stage 4, to going into what's known as a stage 1 accumulation. Those of you who are into Stan Weinstein's work, or an older version of it in Richard D. Wyckoff, you'll understand the stages of the market. So all that would mean is the downward move has ended. The sideways range has begun. And that will all be happening at a weekly demand level. The problem will be also, though, this weekly has gone through what is an uptrend. If you're using Stan's nomenclature, stage 2 uptrend, it's gone through a period of consolidation, what we call distribution, and it is now in a downtrend. So all of a sudden, with this multiple time frame analysis, you're now seeing, that daily supply zone all of a sudden looks really interesting. So even if we break out of this and we start forming demand, if you're looking at this as with a multiple time frame lens, you're thinking this area is definitely an area of interest for me in the British pound to go short. This area in the British pound is located right here on the daily chart, on the weekly chart rather, and the weekly chart that is in a downtrend. So this would be an area of trend alignment for you. On the weekly chart. So prices rally up, we short in anticipation of that being a new lower high on the weekly chart to then continue down. So like so. Prices go up, get to that level, and form a new high, with the anticipation being we're looking for it to make at least an equal, if not a new low. I hope that makes sense. That was deeper than I thought I would go, but like I said, it doesn't really matter. Okay, so let us move on to the next one, shall we? The New Zealand also on the weekly chart, we are seeing it falling off of a supply level. It's a drop-based drop there. In fact, you could actually just put the whole area there. It's quite wide, but we can see that that's the area that the big fall came from. If we're looking for demand below, we have a tested level here that has been holding prices since 2020. So that will be an area to get to. There isn't much quality below that. Again, it's a market that's gone up, stage 2 uptrend, a market that's gone sideways, and a market that is now beginning to fall. As you can see here, I need to turn off this magnet. And it's been beginning to fall. It's now rallied up into an area. It's a similar thing to what I just described for you in the pound US dollar. So will this now be the new lower high on the weekly chart? Notice something important though. As a supply and demand trader, you will notice, or someone who trades with supply and demand, I should say, I'd rather not say supply and demand trader. With someone who trades supply and demand, you would have noticed this level pull back. That supply zone has been removed, hasn't it? that throws this market into a bit of a sideways range. What it means is this down leg has ended. Otherwise, there's no reason why we would be taking out supply zones in a downtrend. We're supposed to respect them. And the reason a downtrend forms is because supply zones are created. The minute you start trading through supply zones, you are no longer in a downtrend. You could be up or you could be sideways. Now, the fact that you've only taken out one supply zone, within the methodology, we say, well, that's an initial indication. It means the down leg has ended. You've gone sideways in that. So if you've gone sideways, that means you have supply above and you have demand below, which is what you've got here. So let's see how this gets on. Now, looking at it on the daily, there isn't any quality supply zones to lean on, not on the daily time frame. You are sitting into some daily supply, so there may be a bounce from here. It's the level that needs to be taken out to turn the daily also into stronger downtrend. It's already in a downtrend because you've taken out, and this is the difference between the daily and that weekly. You've taken out one demand zone, and you've also now established downside momentum with two peaks that you can connect to form the momentum line. Okay, the drop from here rallied up and then pushed to new lows. So that's what you've got. Downside momentum, removing demand zones, creating power to the downside. You will probably get some bounces from these demand zones, but the idea is that those bounces will be short-lived. So if we look on the 4-hour now, you'll be looking for supply that you can lean on to try to join that move to the downside. That level would be the next level above to watch. Aussie US, going to the weekly chart, had a big push up. Again, a market that had been going down, as you can see, like we said. It's broken downside momentum. This made a new low. This peak here, that peak made a new low, so we joined those. Clearly broken. We've taken out these highs here, so we are definitely showing strength, and it's all coming from the demand levels that have been below here. These supply levels have all been removed. So coming back into this area, you'll be sure that there will be attempts to try and buy this market again. We are hitting or trying to get to the supply above. Let's put that in as well. We're trying to get into that level. Whether we turn around here and then go up, time will tell. Whether we come down first and try again, we'll have to wait and see. Right now, it's pretty flat on this time frame. Okay, so let's go into the indices. We'll go with the S&P, and then we'll do the NASDAQ. So the S&P, the US stock markets in general, they've, as we know, been in a monster trend now for, 13 years, since the March lows of 2009. They've had their moments. They've had their periods where sellers have been in temporary control, like in the March 2020 drop, and there have been various other periods in 2018. You had a couple in 2018 actually, and of course the periods in 2016 where we went really flat. So it's not all been smooth sailing going straight up from 2009, but by and large, if you bought then and you held on, the argument is you would have made significant gains, right? Okay, so but let's focus in the here and now. What we have, which is a problem for anyone bullish, is that we have created supply. We don't create supply in an uptrend. We have created supply, or in a strong uptrend, I should say, but we've created that supply. We've come into an area that is not the strongest, but has been used by the market as an area of rallies or to rally price. You can see the move out of that area The initial move was strong, but it petered out fairly quickly. But prices have come fairly deep into it, and it's rallied back up. So as we got closer to that supply, we started to peel off. Now, time will tell whether we're going to new lows or not. But we've been clear about this in the roundtable meetings for months and weeks and days about being mindful, making money on the long side, but also knowing when to start, taking your foot off the gas on the long side and starting to look for shorts. And I've done quite a lot of short-term trading, going short on a daily basis, and it's been quite profitable with intraday rallies just petering out and lots of volatility, obviously going up and going down, lots of volatility in big price ranges that we've profited from. This is the demand zone on the daily we're dealing with. First attempt to go in, we rallied out of it, but we got slammed back down again on Thursday. It's still the demand zone that has to be broken. We do have supply above us. In fact, not one, not two, but three supply zones. So if we're going to start, gaining traction, we're going to need to start taking out supply. There is no evidence right now that is happening. None at all. What is evident is that the selling continues to go on. The attempt to rally out, as you can see, that prices moved above and outside the range of Wednesday, but it got immediately smacked down and made it to new lows below the lows of Wednesday. So very, very strong indication that we may still have a little bit to go, at least deeper into this level before we see a turn. Well, it may turn on once we open on Sunday night and go back up into supply. But it's, for now, it's not the ideal place to be looking for aggressive new short positions. But I don't know that you want to take the bounce either, because that would be really counter a strong trend. It's possible with supply and demand, but one of the potential drawbacks, and yes, I said it, drawbacks of supply and demand, is if you're not fully cognizant of the different ways that these time frames interact, you could very easily find yourself, when you review your trades, whether weekly, monthly, quarterly, that you are taking trades counter to the move that is going on. So that's something to be mindful of. Trend is important, contrary to popular opinion. Trend is important. Okay. All right, let's move to the Aussie US. This is going to be a long video, longer than I've done ever, I think, the way that I'm going. Maybe I have a lot to get off my chest, a year's worth of not doing videos. Hey. So, looking at the Aussie market, this is the Aussie stock market, the Australian stock market, and we have come up again to the top of a range. You can see it looks like it's all-time highs. Yes, it is all-time highs, at least for this broker. So this is what we've got, a mess. What I do see, though, is we have trapped a bunch of sellers in here. We've trapped sellers in this area because they thought with the break of the range, as you can see, that's something market participants are always watching out for. This would have been an indication to many algorithms to start selling. Prices were breaking through demand levels, breaking through an established low, and they got caught because prices regained that level and are now pushing and squeezing those short sellers quite a bit. So if your stop was at the high of the candle from the drop, you've been stopped out. The next level of traders who are in trouble in terms of the short squeeze are the traders who have their stops at these highs or just above these highs. time will tell whether prices make it up there. But for now, we are sitting into weekly supply. So if we quickly take a look at what's happening inside that level, and I'm going to change this so that this is visible on the daily as well. This is what is happening. Do we have any evidence at all that sellers have taken control of price? On the contrary, what we have is evidence that the buyers are still very much holding this market up. Demand zones are still being respected and held. They haven't been traded through yet. We may have, for those of you who will notice, we may have ended upside momentum, but that's never an indication to go short. It's information that that upswing has ended. That momentum has ended. The momentum may reestablish itself at any point. It is an early warning sign, so that means it's also the weakest warning sign with a lot of false positives. Okay, so bear that in mind. What is the second level up is the removal of demand zones if you're looking to go down. We haven't had that yet, so that's not something to take action on just yet. If we do start removing this level, then we can say, yep, the sellers were using this as a distribution area and they've started to now come out of that level, in which case you would be well within your rights to start looking for shorting opportunities on any sort of rallies that happen. And that will be your goal if you wanted to go short. What is probably not ideal, if I may humbly suggest, is going long just yet. It would be quite aggressive to be going long inside weekly supply inside an area that is also daily supply that we can see there, the rally base drop that took us to the new lows. Okay, so that's the Aussie. The Japanese market on the weekly again broke down from a range with demand removed. Just draw that demand in. Broke down through there. We have the highs established as well. So now we're testing. Notice what is happening at this price range though. We are seeing buyers trying to hold up this level. They've rallied above it, and I'll show you what I mean. They've rallied back above that level. After it broke, they rallied back above it. Now they've pulled back to it. Are they going to do that, or are they going to continue down? That is the current question in the market that is trying to be answered. We can see that we have removed this supply, and what we're dealing with is this one. Okay, so the fact that we removed this one also suggests that there were buyers at this level. So basically for the Japanese market, you are caught between this supply above us and this demand that is below us. Okay, that's what I see. All right. German DAX, a market that has come into a big weekly supply level, rallying off of big demand level. Not the ideal place to be going long, not the ideal place to be going short, even though at the time you could see this market dropping like a rock after breaking out of the stage 3 distribution up into this area. After dropping out of this area here, yet we've had a significant bounce. All it's done though is take us into supply. So again, starting to look for shorting opportunities on smaller time frames would be the thing to do. In the UK market, it's proving relatively stronger than the others we've just looked at, because it's pushing, trying to get to these highs up here. After its own downdraft, it's gone right back up and it's testing these highs. It is into this supply zone, this one, so it's not again in an area where you want to buy. Besides, it's come up way too much already for us to be initiating a buy after such a move up in price. Not ideal. And you can see, even though you were going down and going down strong, that's demand, tested demand, that held prices up and pushed it back up. So again, looking for selling opportunities, not selling, looking for selling opportunities. We're right smack bang against these highs from 2018, which I believe are also all-time highs on this broker's charts. So yeah, and we go into some commodities now. So natural gas, what can I tell you? We had these levels in the round table, obviously, and one of us happens to be Ukrainian, so it's quite personal for us on the round table to see what's going on over there. A friend having to keep safe and make sure that they don't die as they dodge bombs, and their homes and friends are hurt. It's not been pleasant for sure. So with the nat gas issue, here we have levels that are being created, demand, and we have supply levels that were being removed. Prices held when it moved back into this ugly demand zone, and we're rallying up. Where we're going into right now, though, is these level on top of level supply zones. That one's been taken out, and we're dealing with the one just above it right now. You can see the first level, it held twice, there, and now we've gone through it, which was what I was saying earlier, that the more times these levels are tagged and prices go deeper ever so slightly into them, the weaker they get. So now we have the demand zone, which was a scenario I was saying for us to anticipate in the euro. You can see with the breaking of this supply zone in here, we created demand. In fact, we created two demand levels to break it. It is becoming parabolic now, though. Now is not the time. Now is definitely not the time to be jumping into natural gas. We are sitting into supply. So if anything, it would be, considering, do you want to take that counter, that corrective move that will happen at some point? Do you want to do that, or do you want to wait for prices to pull back into the demand levels and be a buyer? Some advanced supply and demand traders do both. I would humbly suggest, if you are new to supply and demand, consider going with the trend as much as you can, and these kinds of trades can be a very small percentage of the number of trades you take. I'm not going to put a number to that, because that would be too arbitrary, but it's probably for newer practitioners to be considering going with the trend more than taking the counter trend move. So this would be what we term it as impulse and correction. So this would have been an impulse move up. Anyone who's shorting is taking a corrective move. It may start off as a corrective move. It may end up being the top, which is the great thing for us as supply demand traders, where you catch the top. That's rare, guys. It's something that makes us feel good. It's something that makes us look like, we've got some kind of superpower. It's really not. It's just that for that trade, we were fortunate enough. And there are many layers of filters I would suggest to put into those. You don't want to be the one trying to pick it, because that's literally trying to pick that exact top. So that shorting is at least initially, it's trying to get that corrective move. Buying would be trying to go up with the move that you've seen, you've waited for it, you've seen it pull back, whether it's to this level or this level, and you're now trying to get a bigger swing to go to new highs, for example. Okay, so what I've just explained are the two types of trades a supply and demand trader can get involved in: impulse trade, corrective trades, and being aware of which one you're doing at any point in time, because there are different ways to manage them, very different ways. Okay, all right. Going into crude oil. This is WTI, not Brent. This is WTI. They're similar, of course. So again, one that's had a big rally with all the issues going on around the world, and economies going into inflationary periods and all of that. We have supply up here, and we've pulled back above. This was a strong area of resistance, everybody, right in there. You see how we've gone above that level. We've come back into it and held it onto the short side, but we've pulled into demand. In fact, there are two levels that you can widen that out. So that's crude oil. Again, a market that's gone up. You notice what I was saying about trading the corrective trade. That will be the trade for people who went short. And let's take a closer look at this drop. Let's see if we can use this as a quick exercise in impulse and corrective trades. There you go. I thought you might be there. So this is the drop-based drop with a strong move down. In fact, there were two of them. So let's now go back to the left. Look at where prices came to. So market is in an uptrend. You come into supply. What is the corrective trade? Shorting in an uptrend. Did you get it? Yes, you did. It can be a part of your strategy. I wouldn't suggest it's a part of your strategy once you've started supply and demand and you're new to it, but it's something you can develop into. Your timing has to be much more precise, and you have to know how to manage those trades. If you shorted it and you made money, you should be well out of those shorts by now. Now, what you're seeing is the impulse trade, and the impulse trade is now trying to get on board to try to take crude to see how far it can get. Will it make a new high? That's what they're betting on. Not that they're intending on holding it all the way to the new high, but they're definitely trading, as we can see, this area. They're definitely trading that area. It's come, first time it went up, bounced. Second time it's come a little bit deeper, and it's bouncing again because there are significant orders at this level. So that's supply and demand, impulse corrective trades in a nutshell. All right, let's move on to gold. This has been a battered market for a long time because it's based for 2 years, and traders, we don't like basing, right? We prefer action, markets going up, parabolic. A lot of people have fallen out of favor with the metals because they've not done anything in terms of return on investment for the last couple of years. It's understandable, but with strong trends, as we all know, they all have to have a period of preparation and basing. You'll notice, and we've talked about this on the roundtable for years, and we participated in this. It's the videos are there to prove it in real time. We talked about them. That area of basing has led to the breakout. We've pulled back. We haven't made it as far back as this level. All we've done is where's my curve? All we've done is come into this area, and now we've turned, as you can see, and we're now beginning to hold even the ugliest of demand zones with a big wick to it. Not the most ideal, but we're not trading that blind. You're looking at that level and saying, well, prices are here. Can I go down to a smaller time frame and start looking for evidence that buyers are beginning to take control and trying to take this higher, and see if I can participate in that move? So anticipating it as it's coming out of whatever turn was happening on the smaller time frame. and then trying to join it as it goes out. Yeah. So there you go. That is gold. We are beginning to see the move. I'm going to do it. I'm just going to go to the daily and start looking to see for you guys if we have any levels. Well, not quite. We are going to come up into some sellers up into this area, but I suspect that might not hold. That's just a suspicion. I have no grounds whatsoever to say that for sure. But we are looking into this area to start with. If we do get a pullback, it will be this area we would be interested in. If it doesn't come back and it keeps going, new levels will form and we'll get interested in those. Okay. All right. I'm going to end it there, or maybe I should do corn. Let me do corn. Let's see if there's anything to see. So again, a market that you can see. It's so nice to be able to show you guys this. You can see the turn in a market that had gone, I don't think anyone would argue, parabolic. It just, continued to run for, 2020, came back into again an ugly demand level. As it was dropping, we wait for it to settle and start turning. You're watching it on the smaller time frames to this time frame, and we caught some of this move. We're not in it now, but into this area, that move up there on a smaller time frame, we were able to get some coin there. Okay, so that's it, guys. For now, there isn't anything to do but to wait. We have levels in corn below, just to wait and see if we do get a pullback. Looking at where prices are, the next bunch of sellers will be up there. So we're getting close. Okay. All right. That was, how many minutes was that? Wow. It was close to an hour. But hey, it was fun doing it. I wish you guys well. Remember, if you wanted to get in touch for the video course, which is, I'm just going to give that away. It's probably, I think, I don't know, $100, $200, whatever. It's not going to be the usual amount. It's Easter. And to give back, I'm just going to slash the price. Let's make it 100, shall we? Yeah. What the heck, $100 if you wanted the 7-part video going through the supply and demand methodology. storehouseanalytics@gmail.com. If you wanted one-to-one training, more hand-holding, you can also email me about that. That's obviously a bit more expensive, but hey, if you're interested in it, just let me know. All right, I wish everybody well. Take care of yourselves. Be safe. Bye for now.